Hey guys, good afternoon. I'm Harsha. Today's topic is three important components of a balance sheet. So, before getting into it, I just want to clear that I'm not any kind of financial expert and anything of that sort, but I believe in consistent learning and consistent hungerness of success, right? So, anyway, so basically, to my knowledge, a balance sheet is a snapshot or a picture of a company of how exactly the company is performing in terms of money, right? So to my knowledge, balance sheet can be divided into three, primarily into three different components. The number one is assets, number two is liabilities, number three is the equity, right? We are going to see one by one the three components with their subcategories and of course with examples. So the first one is assets. Assets, right? So asset is whatever you know companies shareholders own, right? Or companies promoters own, be it in terms of shares, common stock, preferred stocks, and so on and so forth. So there are three types of assets, right? The number one is fixed assets, number two is current assets, and number three is non-current assets, right? So fixed assets, for example, land, then machinery, computers, then furniture, and so on and so forth, right? Second one is current assets. Current assets are inventories, then payables, coming from customers, and so on and so forth. The third one is non-current assets, right? Non-current assets are the goodwill of company, intangible assets, tangible assets, and so on. So the second one is liabilities. Liabilities is something that shareholders or company owe to someone else, right? So there are two types of liabilities. Number one is current liabilities, number two is non-current liabilities, right? So example of current liabilities are short-term borrowings, short-term loans, and taxes to be paid to government, and dividends to be paid to the shareholders, and so on. The second one is non-current liabilities. Example are long-term borrowings, then trade payables, then so on. The third one is the third component of a balance sheet is equity. So let's divide equity into two categories, right? The first one is equity share capital, and the second one is the reserves and surplus, right? So equity share capital is also known as shareholders fund. These are the funds raised by external investors or shareholders in exchange of common stock or preferred stocks and so on, right? The second one is reserves and surplus. Reserves and surplus are the money, is the company's money, in fact, I'm sorry, which are reserved for future use, or future investments, and you know or paying dividends to the shareholders, right? So yeah, these are the three important concepts, or I'm sorry, components of a balance sheet, which I think is very very necessary before investing in any company, analyzing and researching the balance sheet and so on. So yeah, I hope this video was insightful for you, and thanks for watching my video.